right, welcome everyone. We are delighted for our next presenter and our final presentation of the day, many of which you've been all waiting for. Very delighted to introduce our next presenter. Oliver, can you hear me okay?
I can certainly hear you.
Excellent. All right, so I'm delighted to welcome Oliver Velez, inaugural keynote speaker of the First Traders Expo, international best-selling author, world-renowned trader, and entrepreneur. Is one of the world's most respected and celebrated traders of all time. In 1999, Dow Jones dubbed him the Messiah of trading. Today in 2020, he continues to be defined as one of the most influential leaders in generation. Oliver, the stage is yours.
All right, fantastic. Thanks once again for having me. And I'd like to thank each and every one of the traders who are actually logged on to this live event, who are taking just a little piece of their time to give it to me for what I hope will be a very dynamic and informative presentation here for you today. What I want to do today, traders, is I want to hold a rather informal talk with you today, an informal brief training session, if you will. And I want us to talk about one very important key fact that I believe all market participants must and should understand. Number one, that money rules the financial markets. That's the first thing we have to understand. And I know it sounds very basic and it sounds like a given, but I'm in contact so frequently with market participants who seem to lose sight of this very important point, that money is the driving force behind market activity. And so in order for one to play the markets or read the markets appropriately, not only must you understand that fact, but you have to know how to read the footprints of money. There is an old Sherlock Holmes axiom, if you will, that states, I believe he stated, that if you want to solve a crime, you must follow the money. Well, if you want to follow profits in the market, you have to follow the money. And so we're going to talk about how you read the footprints of money. And I'm going to actually talk about a little bit about what I mean by actually reading the footprints of money. But first, for the benefit of those who are not familiar with who I am, my name is Oliver Velez. I am a pioneer in the space of direct access trading or active trading, or what some might refer to today as swing trading or core trading or even day trading. I've been in this industry for the past 33 years. I've been trading for a total of 38 years. Just as a very, very brief little bio, I was chosen as one of the first inaugural speakers for the first International Day Traders Expo in this industry all the way back in 1999. I was also chosen by Barron's as the #1 source to go to for professional trading services, information, and training. That was an award or a status given to me by Barron's. I was also named by the Dow Jones actually organization as the Messiah of trading in the year 2000, and I am one of the most published traders in the industry. I have 5 international best-selling books on the topic of trading the markets for a living, and those 5 books are written in 5 different languages that continue to sell very, very strongly throughout the world. I do want everyone here to make sure that they are following me. If you find this presentation of interest and want to continue the work that I set out to do over 26 years ago, which is to spread the gospel of trading throughout the world, please follow me on my YouTube channel, Oliver Velez Trading, where I dedicate a great deal of time every single day to make sure I put something out that can raise your level of market sophistication. I also want you to follow me on my Instagram channel, OLVelez007, and all other social media networks that I contribute to on a daily basis with the same purpose of raising the level of market sophistication amongst all individuals who have an interest in trading the markets actively. I also want to invite you specifically to my last mega event of the entire year. This is going to be held on this Saturday, and you can register for that event by going to ifundtraders.com. These events are the most popular trading events in the entire industry. The last event I held had over 20,000 participants. We're expecting somewhere close to the same number for this event. It will be my last one, and it is absolutely free. Give me 2.5 hours of your time, and I promise you, after that 2.5 hour period, this upcoming Saturday, you will see the markets differently, trade the markets differently, and there will be no point of return for you. Okay. I want to talk about how we read the footprints of money, and I want to talk about specifically now what we need in order to do that. Now, I am a technical trader, which means that while I do take a look at some of the fundamentals behind organizations and industries for the most part, I largely look for opportunities by what the price activity is doing. I believe that fundamentals attempt to predict what the future is going to be, which I think is virtually impossible to do. I believe that technicals help the trader understand what is happening now. So I think that's a very important distinction to understand, traders. Fundamentals try to take the past and predict what the future is going to be by looking at the numbers and the facts from the past. Technicals help the trader look at what is happening now. It is my belief that knowing what is going on now can in a greater way help you determine what is likely to be a future now, because a strong now begets an even stronger future now. So I'm a technical trader at heart, and I predominantly look at the activity of the markets through the eyes of a candlestick chart. Now, we'll need a candlestick chart. The time frame is going to be your choice. Time frame of this chart is going to depend on what style of market play you play. So if you're a swing trader, you probably want to look at the daily chart. If you're a core trader, you probably want to look at the weekly chart. If you're a long-term investor, you probably want to look at the monthly chart. If you are a day trader, you probably want to look at a 5-minute chart or so. And if you're a micro trader, anywhere from a 1 to 2-minute chart. But the time frame doesn't matter. Your style of market play dictates the time frame of chart you should focus on. There is no right or wrong time frame, just a time frame that is specific to your style. Now, we're going to put a 20-period simple moving average on that candlestick chart. We'll look at this in just a moment. And a lot of people ask me, Oliver, why simple? Why not exponential? Why not weighted? Why not triangular? Why not any of the sexier varieties of moving averages out there? And I will tell you this, that I have been trading the markets for 38 years. I've been trading professionally for 33 of those years. And I've experimented with probably every single technical indicator you can probably come up with. I've experimented with every possible moving average and moving average combination you can conjure up, right? And I will tell you that I have found no evidence that the sexier varieties are any more potent than the simple variety. So whenever I have an option of going a little bit more complex or keeping it simple, I keep it simple. So we're using all simple moving averages, the 20-period simple moving average, the 200-period simple moving average. Now, these are 2 of 5 dominant moving averages I teach my traders to utilize, okay? It's not the entire list of moving averages, but they are 2 of the most important moving averages we rely on. Then there are 2 types of bars, 2 types of candlestick bars that I want my traders to actually become very intimate with. We'll talk about those today. What I call elephant bars and tail bars. These 2 bars have 2 versions for the most part, a bull version or a positive version and a bear version, a negative version. And we'll take a look at these 2 bars and how they help us read the footprints of money. Now, before I go to charts, let me just say this, traders. It needs to be understood that the only way that you and I are going to make money is to find out which way the institutions are stampeding. You see, I can't make Microsoft go up or down in any significant way. Neither can you. If you're watching me, pretty much you're in the same boat. You can't have a great influence on the activity of an Apple or a Microsoft or a Facebook or a Baba or a Twitter or a Starbucks or a JP Morgan. You can't have an influence. In order for us to make money, we must find out what the players, where the dominant players are and what the dominant players are doing, and we must jump on the coattails of those dominant players. Now, when I say follow the footprints of money, I am talking about institutional money. Those are the large institutions, the large hedge funds, the large mutual funds, the large family offices, the large money management firms, the large money out there that's basically making very serious multi-billion-dollar commitments into our specific financial instruments. Now, when the vast majority of those institutions in a specific financial instrument are all going or stampeding in the same direction, that's what I'm talking about, capturing those moments, watching those footprints. And I call these institutions elephants, if you will. So these are the elephants of the market. They leave giant footprints in the dirt, in the sand. They wish they could hide from us, but they can't. They're too big, they're too heavy. They cannot leave the footprints of mice. They can only leave the footprints of elephants. And if we can detect the footprints of elephants and where the vast majority of those footprints are going, are they running to the upside or are they running to the downside? Or is there enough running to the upside as well as to the downside to cause the market to be trapped? That's all we really have to do, is to read the footprints of these elephants and to find out where the balance of these elephants are going. Are they equally balanced across their activity? Market goes like this. Or is there a slight advantage of the elephants running to the upside over the elephants running to the downside? All right. That means your markets has a bias to the upside. Or are the vast majority of those elephants running to the downside, leaving, versus the elephants going in which case the bias is going to be to the downside. We must know how to read which way the wind is going, which way the elephants are running. And if they're running in one direction, are they running in that direction with a great degree of force? And that's what we're going to look at today. So let me go to some charts here if I can. All right. And, oh, great. We can start off with this chart here. This happens to be a chart of SPYs. This is a daily candlestick chart of an item called the Spiders, symbol SPY. It is an ETF that is designed to track or mimic the activity of the S&P 500 index. Now, every bar you see, whether it's red or green, represents a full day of trading. All right, green bars indicate that the stock or SPY or the S&P 500 closed higher than where it started in the morning that day. And if you have a red bar, it's clear that the market, the SPY or the S&P 500, closed lower than where it started that day. So very quickly here, for those of you who are not familiar with reading candlesticks, I'm going to give you a very quick summary here. Green bars start the day at the bottom of the green and end the day at the top of the green. Red bars start the day at the top of the red and end the day at the bottom of the red. And that's, for the most part, all I need you to understand. Now, when I say I need to teach you how to read elephant bars, I want you to take a look at this section of the S&P. I want you to note that the blue moving average is the 20-period moving average. The red one is the 200-period moving average. I want you to note that In this scenario, to the left of the chart, you have your stock, SPY, moving to the upside for the most part above the 20-period moving average. You have both of those items moving to the upside. This is key. Your stock is moving to the upside and its 20-period moving average is moving to the upside. Both item one, your stock, item two, your 20-period moving average, which are both rising. These two are above item three, which is the 200-period moving average. I call this the three-finger spread. For you, it might be this way, I'm not sure. Okay, the three-finger spread. Rising stock, rising 20, both rising items above the 200. The 200 doesn't have to be rising. This is what I call the picture of power. And when you have this picture, for the most part, your elephants are on the green side. The elephants with the greatest amount of strength are green. They're not the red elephants. The green team is the dominant team. The footprints on the green side are what we need to focus on. Now, I want you to quickly take a look at this whole section here. And I want you to note one very clear thing. Out of all the green bars and the red bars, the green bars are by far greater in number. And while this is something so simple, it is almost overlooked by the vast majority of market participants. You can gain an edge by simply counting the bars. There are two dominant teams, guys, in this game, buyers and sellers, green team and red team. There are two large group of institutions, the green institutions, the red institutions. They play on either side of each team, either of each team. Now, which institutional team, the green team or the red team, which ones are producing the greatest number of bars? Which ones have more footprints in the dirt than the other? Obviously green. For every red bar, there's 3 or 4 or 5 green bars. Look at it. One red bar, green, one green, 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 one red bar. Green, 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 one red bar. Green, 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 green. You get the point. So one of the ways we can follow the money is just simply to count the colors. Which team is producing more of its own color than the other team? Obviously, if green is capable of putting its footprint in the dirt more frequently than red is able to put a decisive footprint in the dirt, then green is the dominant player. And that's the direction you should trade in or go in or bet your money in. Now, in addition to counting which color is the dominant color, I want us to take a look at the size as well. Now, it's not always something we can rely on, but in the vast majority of cases, we can rely on size as well. So which side of the equation, which color is able to put in the strongest looking bars? Now, we have a strong looking red bar here, but followed by another strong looking green bar. So we can pull out all of your very solid, strong green bars. Okay. We want the really solid ones, the ones that are very decisive, unmistakable. Okay. Now, okay, these are the strong green bars. And if we want to go all the way to the right, we can continue to pull out the very solid ones, the ones that are mistakable. See, this one is not quite as solid as I'd like because of a little tail on either side of it, but we want the really solid ones. Okay. So we can do that. We can also take the red solid ones and pull out the really solid ones as well. Now, if we take a look at this section, I am based on just this theory here, just based on how solid the reds are. I see a preponderance of solid red over solid green. And this makes sense that the market is sort of sideways, unlike it was before. Okay? So based on this second thing, solid bars and the frequency of those solid bars, I'm starting to get a little concerned in the sense that green is potentially losing its ability to produce consistency like it did before. The solidity, the oomph, if you will, the power of red bars are definitely stepping up in number and frequency. We've got some solid green bars, but there are a lot of extra little ones mixed in between. You see the little ones? Not quite as convincing as these. You see? Here's a solid green one. But the greens, even the ones that go up, have a little hesitant nature about them. They're not quite as ferocious. They're not quite as fierce as the red ones are when they show up. So I am reading now that the footprints of sellers, the footprints of institutions coming out when they decide to come out, they're coming out with greater force than the institutions that are committed to going in. This is extraordinarily important to be able to read. There are always institutions going in, and there are always institutions coming out of a market. Always. In the greatest of bull markets, there are times when institutions come out. They might be taking profits after gains after 5 years or what have you, but there's always a mix of institutions going in and coming out. You must be able to read which ones, when they do go in, and which ones, when they do go out, which ones seem to be going in. Are the institutions seem to be going in with greater power, or when they show signs of coming out, are the institutions coming out with greater force? I am telling you that basically what I am reading is that institutions are coming out with greater force. And this is today's chart, by the way. This is today's daily data. And so this is me reading this second sign. So remember, the first sign is just to count the number of bars. Versus there on the left-hand side, you have far more green bars than red bars. So on that metric, in that metric alone, bulls are dominating, buyers are dominating, institutions going in are dominating the institutions coming out. Here, starting from here, I am seeing a different picture based on the second metric. Which bars seem to have more force? Which bars seem to have more power? Which bars seem to have more oomph, if you will, more violence, more ferocity? And it is the red bars. When the institutions coming out decide that today is the day we sell more than normal, they are really dominating the action. More so than when the institution's still committed to going in. When they say, okay, now it's our day today to hit the market a little stronger, a little heftier, they're not quite making the cut as far as power, oomph, and velocity, I should say. All right. If we take the count here as well, we're starting to see, I don't know, it's more salt and pepper. Whereas here, it was clearly dominant on the left, as you can see. Clearly dominant, where you just had streams of dominant green, only peppered by an occasional red. Here, you're starting to get a greater number of reds show up than red showed up here. A greater number of reds showing up. Okay? We're starting to get, here's this period is equal. We had some consistent green here. We had some fairly consistent green here, but we've got consistent red, consistent green, consistent red, consistent green versus just consistent green throughout. So we can see the change occurring in the balance of power here. There's definitely a change. Okay. Now, the third metric I want to bring your attention to in terms of reading the footprints of money is follow through. I'm going to call this concept follow through. Follow through is when a strong bar leads to follow through after the strong bar. And if a strong bar to the downside happens, I can draw this. Let's say this is a bar to the downside. That bar produces fluid follow through after it. Okay. So follow through is very important to understand that when one team produces a fat, solid bar, are they able to follow up on it? Or does the other team come back so ferociously that they knock that one bar out? All right. And this is what we need to also keep an eye on. What's the follow through? So now look at this power green bar here. There's follow through after it. You see? Solid red bar here. See that solid red bar? Little to no follow through after it. Solid to green, fat, solid, concise, perfectly formed green bar there, and there's follow through. Okay. Now let's take a look at this fat red bar, and there is follow through. Okay. Now we look at this fat green bar, and there's follow through, but look at this fat red bar here. There's no follow through. So which side has more consistent follow through after a solid bar? Now, there are periods where your market can be in an equilibrium where both are displaying just the same number of metrics in their favor. And that's a market that's like this. And we're seeing that kind of market environment now, although I am seeing a slight tip in the edge of power on the red side, just in terms of sheer number and frequency, and the less convincing green. When the green does go up, it goes up, but it doesn't have that same oomph that the red's having right now. And so it's these three metrics that I want you to keep an eye on. The simple color count, which color's more dominant? Sometimes your color's going to be equal, but there are many times where you have a clear color dominance, green or red, like we have on the left here. I want you to note the size of bars. Which side is producing the greater number of ferocious bars? Metric number 2. Metric number 3. Which side is failing more than the other side to follow through on their strong bars? That's the weaker side. And when you take these three metrics and put them together, you can come up with some very clear indications of who is dominating the market right now and what side should you be leaning toward, the downside or the upside, the green side or the red side. Let's take a quick look at a few others here. This is a popular stock that has not only been in the news a lot just because it is it's considered to be China's answer to Tesla, But Neo, NIO. So I want you to take a look at the two moving averages again, guys. Notice that you have your 20-period moving average, which is rising. Okay, for the most part here. Get the drawings up here. Okay, so we've got, how do I do this? Yeah, 20. We've got the 200, and we got the stock. So you got the stock, which is rising, the 20, which is rising. The two rising items are above the 200. Now, remember, when you have that scenario, it already gives the favor to the green bars. Now, if we take a look at this period, we see, for the most part, equilibrium. We see a salt and pepper type scenario. We see just as many red bars as green bars. All right. Whenever I have a period of salt and pepper, I need one side to either get out of that salt and pepper period to the upside, green, or get out of that salt and pepper period to the downside. And I needed to do it convincingly. And we can look right here, boom. Neo puts a fat, green, powerful, bullish bar that comes out of that equilibrium period. That's all I need to know. I'm going with the footprints in this direction. Okay, here's another period of equilibrium here where you see a salt and pepper like scenario, just as many red bars as green bars, nothing really convincing on either side. And boom, emerging out of the salt and pepper period is the strongest, most powerful green bar in quite a while. That's all I need to know. I've read the footprints of money. The biggest footprint of all is on the green side. I'm betting on the green side. Okay, same thing here, period of equilibrium, small bars, no elephants. We didn't get a chance to talk about tails today, but no elephants, nothing really powerful. There's a tiny little solid green bar here, red bar here, but it does no follow through. So the market's still equal. And then boom, convincing, irrefutable, unmistakable, fat, solid, almost perfect elephant bar to the upside. Now, if it were to the downside, I'd take the bet to the downside, but I would rather take the bet to the downside under the moving averages. We are above the 20 and the 200. So the better odds are to go with your footprints on the green side. All right. The red footprints are better underneath the moving averages. And if you can keep those basic concepts in play, you really shift the odds in your favor a great deal. Okay, a great deal. Now, what we can see, this fat red bar, but no follow through. And then a fat green bar with follow through, fat green bar with some follow through, green bar with some follow through, green bar with some follow through, green bar with follow through, green bar with follow through, green bar with follow through. You get the point. Now we've got the biggest red bar on the entire chart. So what is this telling us? That all of a sudden, the red team or the red elephants are capable right now of putting a serious footprint in the dirt, in the sand. This is our first warning that things could be cooling off or likely to cool off for Neo. That's reading the footprints of money. Okay, it's not rocket science, traders. We have to be able to do this. All right. Here's Uber. If you can take a look at, let's pull out all of the, since we see as
Hey,
one of
Oliver,
the
can you
winning
hear me?
quarterbacks. as we can see that Uber wound up rocketing to the upside, but were there signs here to give us an indication that the buy side was just a bit more powerful? Well, we can pull out our really solid, perfectly formed green bars out of the mix. Okay. And we would have to do this as well on the red side. So let me see if I can change. Do I know how to do this? Let's see if I can change the color here and pull out the solid red ones. Now I can already tell you that the solid green ones are greater in number. I can already look at the chart and tell you that for the most part, the green bars are more convincing than the red bars. Look at this period of red, not as convincing as this period of green. Okay. There's something also I see here that leads me to believe that there is more buying going on here. It's tail bars, which we didn't get to really discuss here today like I wanted to, but bottoming tail bar, power bar, bottoming tail bar, power bar. They are equal in importance to very powerful fat green bars. All right. So if I add those to the mix, fat green, bottoming tail bar, fat green, bottoming tail bar, fat green, you get the point, fat green, the footprints being put in the dirt here by green are very, very convincing. And when red gets its chance, every now and then there's a solid red, but then it's followed by tiptoeing by red. Look at the tiptoe. Okay. Not quite as convincing as the follow through after. And the follow through here is powerful. The follow through there is powerful. All right. And so I am ultimately not surprised that the balance of power tipped and exploded out of this range to the upside as opposed to the downside. All right. Again, reading the footprints of money. What's the big money doing? What's the big money doing? All right, let's see. I want to I'm sure there are a lot of investors here. So as an investor, you don't want to look at the daily. Let's take a look at something like the weekly chart or so. And if we take a look at Cisco here for a second, we can clearly see that Cisco from July, mid-July or so, has really had more of a bias to the downside. Okay. This is somewhat different from what the stock was experiencing before. What kicked things off? The ability, what changed the nature of Cisco from going from this clear dominant bias to the upside to having a more predominant bias to the downside? Well, the first troublesome footprint that I see is not this, because the ability of Cisco to follow through on that bar wasn't there. It was not this red bar, if you can look carefully. Let me open it up a little bit so you can see it maybe a little clearer. Here's another solid red bar that's trying to buck the trend of the green. But as you can see, it was not able to follow through. So this did not concern me unless I started to see follow through. This did not concern me unless I started to see follow through. Where is there a big fat red bar plus follow through? Now we've got trouble. You see, in the most powerful of all trends, there should be no great follow through by the opposing color. And the very fact that Cisco was able to produce a red bar, which is not odd, okay, but for the very first time was able to produce follow through on that red would lead me to believe that there's more downside to come here. Fat red bar plus follow through. Fat red bar. Let's do this again. Fat red bar plus follow through. Fat red bar plus follow through. You see? Fat red bar plus follow through. This is somewhat troublesome when you start to see consistent follow throughs on the red bars for the first time in a while. And so, listen, institutions that drive our markets, traders, they're not owners forever. They are buyers and sellers. And we have to be able to read their footprints because it is not your neighbors that's pushing your stocks up. It's large institutions. And so we must read the actions of these large institutions and the items that we want. It's not your friends, it's not your neighbors, it's not your family members pushing these stocks around. It's institutions with billions of dollars. They wish they could get into the market and out of the market without leaving their footprint. But they can't. They're too big. They always leave their footprints. And it's not just one institution we're looking for. We're looking for the family or the collection of institutions that are dominating the activity or the volume in this particular item. Now, what percentage of that family or group of institutions are moving green or moving red? Once you're able to read that with some degree of regularity, consistency, you can place the odds of future direction in your favor in a fairly substantial way. All it takes is for us to have a little bit of an edge. Little small edge is all we need. We don't need a gargantuan edge to throw everything in our favor, or most of the things in our favor. And this is one of the edges I believe that you need. There are others that I'd like to teach you, but this is certainly one of them. So traders, there you have it, reading the footprints of the market. I want to thank you for joining me today. I also want to invite you once again, if I can do this, guys, let me do this. I want to invite you to my talk tomorrow. I will be speaking right here at the International Money Show once again tomorrow, I believe at 4:40. We'll be talking about another interesting, fascinating topic that will build on top of this one. So I want you to take what we talked about today and what we'll talk about tomorrow and stack them together. And this will make you even more of a ferocious market player. I also, again, want to remind you, traders, that if I can do this once again, I will be holding my last and final mega event. Once again, I hold the largest trading events on the internet. I've broken records in South America and other parts of the world. I plan to do that this upcoming Saturday as well. We have close to 20,000 people registered. And by the time Saturday comes in, it could be substantially higher. I don't want you to miss this event. It'll be held in all three of my key main languages, English, Spanish, Portuguese. Join me there, register by simply going to ifundtraders.com, and you can speak to anyone there if you have questions regarding any of the services or trainings that I offer. But at the very least, I want to see you this upcoming Saturday. And if you can make my talk tomorrow, I'll see you at 4:30. Thank you very much, traders.
All righty. Thank you very much, Oliver. We appreciate your time and thank you for an excellent presentation. I want to remind the audience that you can access all the sessions from this event by visiting virtualpass.moneyshow.com. And we appreciate everyone's time and looking forward to see you tomorrow. Thank you, Oliver.